Yo, yo, yo. Welcome to the streams. I'm gonna wait for a couple more people to come in. We have 2 viewers at the moment. Um, but yeah, for those who are actually here, is it possible to tell me if you can hear me? So I just want to look at the amount of delay that exists. It's because I'm currently using Kieran, perfect. Can you hear me? I need to hear from Kieran. Alright, I want to test the delay. So Kieran, if you can hear this, type 1. Oh, fuck yes, it's like 4 or 5 seconds. Fantastic. Alright. Cool. Well, welcome back, right? So we're on ultra low latency today. That good shit for you guys, obviously. So let's get straight into the breakdown. We're already 1 minute late because these viewers are late. Right. So monthly, right? Cool. Let's look at what it's doing. So monthly, obviously, we had a previous monthly closure with no top wick. We've been saying this for the past week. So if you were to look at this, I was just thinking about this, right? If you were to look at this and this was a 5-minute chart, what would you be expecting, right? You just closed our support here, right? You didn't break these highs, right? So you also, I mean, if you say you did break these highs, you closed back into range and now you're respecting again, right? So if you're respecting, what can you expect? You expect it to fill the range, right? You're expecting a rejection. You're going to come down, you're going to fill the range down to around these areas, right? These areas, potentially these areas first, whatever happens first, but it's highly likely, and that's the trend for gold for the next months. If you just thinking about this in terms of the 5 minutes is the same as thinking about it on the 15, 30 hourly. Everything is exactly the same. The candles print the same, right? They're just bigger candles, and each candle has more of like pips within them, and that's about it. But so if this was a 5 minute, how would you look for sells, right? You would be looking for potentially this monthly candle to close bearish, right? Back into this range, potentially down here, right? Ideally, you could get a closure like below these sorts of areas here. Get a closure there, amazing. We'll be looking for a top wick, tapping these areas, right? Or even breaking these highs maybe around these areas, 1998. We're looking at potentially these here, right? This here, maybe this here, for it to start driving down. So if it comes up, creates that monthly high, you might even have some swing positions in Don's trade, right? You'll come down and you'll fill the range at least 1830, and you might even come down further than that. So that's just the monthly candle. So understanding that we're in the range, we've closed respecting the last previous months, right? So what's happening, right? Well, we're going to come down, we're going to fill the range, and then we're going to make a decision, right? If price wants to continue down, it's going to do this, right? Reject maybe a little bit, might do this, and then come down, reject, grabs liquidity, and then come down. And that's just market structure, right? So if that happens, cool. We'll be looking for sells on a lower time frame to match that kind of monthly bias coming down towards those areas. Let's jump to the weekly. Cool. So the weekly, similar to yesterday, we closed at a resistance, right? But we don't have a top wick for the weekly. Is it likely that we won't have a top wick, right? We have to ask ourselves that. Yeah, there's a huge chance that we won't have a top wick, because this could have been the top wick for the weekly, right? If the weekly wasn't Monday to Friday and instead it was Friday to Friday, right? Then this candle would have a top wick. It's just because this opened on Monday, it doesn't have the top wick, and the Friday potentially had that top wick for it. So you don't look at candles just in terms of like its closure and everything. Obviously that's important as well, but also look at where price is tapped. Because once price has tapped those areas, it's essentially a line chart, right? If you look at this on the weekly, these wicks are just this, right? If I draw this out, it's like, cool, we came down, we rejected a little bit, and we came back up to here, down to here, to here. Okay, we're pushing up, back up to these areas, right? It's just this, like this is exactly what price is doing, right? And it's just a line chart. And like when this happens, right? Say we're in this area now. We've come up to create that top wick. Do we need another top wick here? Probably not, right? If we do, sure, that'd be great, but we'd also be worried in terms of potentially market reversing and starting to go up. So having no top wick can happen, and that's exactly what's happening at the moment. So, like I would say, the weekly is closing respecting 1931, right? We broke this down yesterday, and it's in a range between 1931 and I would say around here. Here's good, around 1900s area, right? 1898. You can move it up like around these areas. So, what has price done? Price has essentially filled the range, right? You've come down to fill the range around these areas. So what are you doing next, right? This is a decision area for price, either here or around these areas, right? So, you have some level of support here as well. Like your support is kind of just somewhere in this range here, I would say, is your support. Somewhere in this range is your support. So cool, you're in this kind of decision zone now, and because you're here, price can either start rejecting, right, and then do something like this. It might even fake out to grab liquidity to go back up, or it might continue down. Like with this, it might just reject a little bit, grab that liquidity to continue down. It can do both things. So just we have to look at where it's closing below, or the ranges, and what it's likely to do, right? So if you look at price closing into this area, last time price closed into this area. And potentially respected, I would say let's put a decent level here. Let's put the level at around here, right? I'm liking this level. So last time price respected, where did we grab liquidity for sells? Where did we grab liquidity for buys, right? So what are we looking for? We're looking for every time price is bearish filling the range, right? So potentially this might even be our only, ooh, that is massive. So this might be the area we're interested in, right? If we're interested in this on the weekly, right, then we're just going to highlight this in a box for now. Because obviously we had this bearish closure, right, respecting, and a bullish closure, right? Bullish closure indicates that you've now found support and you're in a range. And what does price do in a range? It fills. Look what this candle did. Look, and it just tapped the range towards 1931. So this is the range we're in terms of the weekly. So if price is closing here, it needs to make a decision, either fills the range, and if it does, next week's candle is going to be incredible, because we're going to be potentially closing below this support at around 1918, and this is probably a daily support around these areas as well, right? So closure below these areas, get a top wick breaking the previous weekly high, tapping around 1931, even slightly higher, 1937. If it breaks all of these highs, fantastic, 1960 sort of areas, and we'll get our sells coming down. So that's one area we're interested. So let's just keep that there for now. Daily, right? We mentioned just now that 1918 is a pretty strong area. Oh wait, is it 1918? Yeah, 1918 is a I'm gonna mark this up. So what does this look like on a daily, right? Because this is a pretty good support here, right? Let's jump on the daily. What is this, right? This was the last time we found potentially some level of support and resistance, right? And you could move this up slightly. I would say you might have something here on the look at all these wicks, right? You could have something around these areas, right? 1920 sorts of areas. But if we go back 1918, last time price was in these sorts of areas. Look at all these rejections here, right? Just this is incredible. And you just kind of bounced and you ranged very hard in this kind of zone there. But I would say for the most recent price, this level doesn't make the most sense, right? Obviously it's okay in terms of those previous areas, but we're looking at potentially these areas now. I would say you have an area around here, and then your next area below, I would say, is approximately here, right? You have around 1884 areas. You have some rejections here, some support here, some resistance there, right? You have loads of wicks around here as well. You have a wick tapping these areas, and you have this a rejection, strong rejection at this area. Obviously, this is the daily, right? So we can zoom in for more accuracy in terms of that. But we're noticing that we're breaking below the most recent range, most recently it's this, right? We're breaking below 1906. Last time price broke below 1906, it just drove down to fill this range at least to about 1893. So it's very likely that 1893 will get tapped in the next daily candle, or next 2 daily candles, right? Or maybe it will tap next week, right? It might reject here so that the weekly has a bottom wick after a push down, but it'll potentially close here, and then it will just fill the wick, create a lower low if it wants to continue going down. But because we noticed that we're closing below this and also closing below 1903, which is this stronger support around here, we can identify that the range is now between 1903 and potentially somewhere around these levels, right? So it's going to fill these areas. You might have a smaller range here because you see these wicks here, right? So if I put a level here as well, and we drop down to 4, you will see, look at that. We have some respecting candles there. We have some respecting there, right? And every time price is in these ranges, it fills, or it fakes out here, or it fills. So it's very likely that we're going to be coming down, tapping 86, tapping 88, 96 and 88. Let's go back to the daily. But because price broke down, where can we get our sells and where can we get our buys in terms of that, right? So this looks naked as fuck, right? We don't have top wicks. This had barely a top wick for the previous daily, but noticing that the weekly had this top wick, massive top wick previous week as well, so we didn't need a top wick necessarily, and there was quite a lot of liquidity for us to start driving down. There was like a higher time frame liquidity grab. So, I would say, even here, if it does continue to drive down, there's nothing we can do about it, right? If there aren't any top wicks, then we probably not get any entries, but it's likely that it will need to start grabbing some level of higher time frame liquidity, right? Because last time you pushed from these areas, you stopped it around here, and you grabbed liquidity towards these areas, right? For this, you grab liquidity towards these sorts of areas to come down and fill this range. For this, you might have grabbed enough liquidity here to say this might have been that liquidity grab, but you're looking to grab more liquidity, potentially breaking the previous daily highs to come back down. So this is why we talk about breaking candle highs if they don't have wicks and stuff, because if it doesn't have a wick, so let's say you have 2 candles which are just like this, right? And you have one top wick which is like this, one top wick which is like this, and then you just have a candle that's like that, right? You have no bottom wick here, no top wick here. What does this do? If you just combine these, this is just one larger candle, right? Because you didn't have a higher high, this is just one candle. There's no structure there because it's just pushing, right? So you just have to notice that. So if the top wick has been created, for example, let's look at the weekly, right? What does the weekly candle look like? If we just do what we just said, and we combine these 2 weekly candles, we have, I'm going to draw it out slightly bigger actually, but we had top wick like this, and then we had from here driving like this, right? So if we just combine these, you could say that, oh cool, you have a weekly top wick, right? So this is what we talk about in terms of price tapping certain levels. If it's already tapped here, it doesn't necessarily need to come back, tap these levels again. If it does, it might create a lower high and then start driving, but that's just a price being nice to us and giving us positions. So yeah, so in terms of sells on the daily, I would say I'm looking for it to tap the top of the range, which is close to around 1913, because if you're in a range, right, you're going to break out, you're going to need to grab liquidity. You might only see liquidity grabs around 1907, but we'll identify that more on the 4 hours. So it's difficult to say on the daily, but yeah, let's go to the 4 hour and have a look what's going on. So 4 hour, look at this, right? There's no top wicks, no liquidity grabs really, higher time frame liquidity grabs, that is. And where are we closing now? We are closing here, right? And we're closing, I would say, respecting a support at around these areas of 1900s. So if we drop down to the hourly just to make sure this is a solid area, I would say it's around here, right? 1899.8. And yeah, you got some respecting candles there. You have some support, some resistance, and whatnot. So I would say on the 4-hour, you're also in that kind of area. When price drops below this area, where does it fill? It fills towards around these areas, right? Fills towards 93, 1893. So if price were to start breaking below here on the 4-hour, expect it to drive down to 83, right? And potentially grab liquidity even lower to start coming up for a rejection. And coming up could be a rejection, or it could be liquidity grab to come back down. But if it's respecting here at the moment, it means it could need more liquidity to start driving down. So we're looking at last time, or where did price tap last time before it was able to come down, right? So I'm noticing that the previous 4-hour here also has no top wick. So and also the previous one before that had no top wick. So I'm mainly looking at this candle here, this top wick here. Where is this in terms of a level? Potentially these areas here, right? So if we get wicks at around these areas, you know, if we're respecting these sorts of areas here, we could get wicks around these areas to push price down to 1893. So I would say, for me, the top of the range is around here, right? You have some candles here, some support there, generally around this area, potentially here as well. And you might be able to get pineapples around this area, around 1913, right? So 1910, 1913 are your areas that I'm interested in, and this would be potentially a 4-hour top wick for the previous 4 hours, grabbing that kind of liquidity there after the push. And I'm quite certain this will happen at some point. You will get price tapping these areas, and then you will get some level of rejection. It's just, I don't know how much it will reject by. And if it will reject, if it's going to reject by a little bit and then start going up again. So I just don't know. But if price comes up into this range here, I'll be looking to take sells around here in terms of the 4 hours. So we'll mark this up. I'll put 1 for now. Actually, I'll put 2. And then we can drop down to a lower time frame to see what's up. But if price starts driving straight down first, what does price do? It fills ranges, right? It fills ranges towards around these areas here. Like, I'll probably put it here. I'll say I'll probably look for my first buy. 4 hours not as clean in terms of looking for the buys at exact zones, but I'll probably be looking for my first buys around these areas, or yeah, probably around here. Right, so now around 1892 areas. That's where I'm looking for it, and then I may have potential pineapples around this area here. So why is that, right? If we go back to the 4 hour, when price respected, right? Let's say you have another 4 hour which is respecting and it's closing bullish, right? With no bottom wick. Cool. That might be some indication that price needs liquidity to come back down, right? So if we were to get into a sell at around these areas, you know, you like, it might not work out because it could just continue to fly up to grab that liquidity. But we're looking for buys around here because this is the next range it's typically going to fill. So, you know, looking at these areas, and here you have a strong rejection at these sorts of levels to come up, and you know, this could have been a liquidity grab to come back down, but market structure changed and we started to push back up, right? So taking a sell around these areas after you've tapped 1892, 1889 is valid, because you've created the structure which is bearish, and this would be your potential lower high, and you would potentially have pineapples around 1903 sorts of areas. But yeah, so those are my buys. But at the moment, to be honest, I think I'll still need more market structure to print. We've had a lot of just kind of bearish momentum, right? So I want price to probably trickle up a little bit like this, close bearish like this, and then I'll look for sells coming up to here. Sells, potential buys if it's tapping, like, you know, these sorts of areas after trickling up. I'll look for potential buys if it breaks all lows coming up. So let's identify how this could happen, right? So say you have, this is your range 1. Say you have a range 2 like this. Let's say price, and you're here, you're fucking about, and then oh cool, broken range 2, right? Breaking out of range 2, shit, right? I'm gonna be looking for buys in range 1. And this would just be your liquidity grab, right? I don't know how far this would be. I'll probably take a first entry somewhere within this range 1 and then some pineapples around here. If that doesn't work up, I know it will probably tap the top of this range, right? Because then this is your third range, right? If price was to continue pushing down, it's likely, if I took a second position here, right, it's likely going to come up to here, tap the top of the range before coming down, right? Fills ranges. So it's relatively safe, and having that pineapple just gives you more of a guarantee. And then if price does this to come back up to these sorts of areas, it might only come up to about 1908 sorts of areas, in which case, depending on market structure, I might be in a sell, right? Because at that point, you've created higher top wicks for this hourly. You could be coming to form this hourly top wick for these as well. So looking for a smaller rejection around those areas would be relatively valid as well, I would say. Let me just get rid of this. But yeah, I would need more market structure to form during Asian or London before I would be able to read price properly. Because, for example, this, right? You know, you're in a range. When price pushed down here, you're in a range between here and here, right? Pretty clear range. You didn't break above, you didn't break below. You started breaking below, right? Cool. We'd be looking for those sells at around these top wicks, breaking back into range 1, right? That's exactly what I just mentioned there. Potentially in the middle of range 1 here as well. So you'd be into sells around these areas, coming down to fill this, right? Then you'd be in a buy around these areas because it's a key zone, right? Potentially around, I would say, yeah, like 1901 sorts of areas. You'd be in a buy there, and you'd probably take profit around 20-30 pips, or whatever. And then, you know, you'd be looking for some stuff to happen. But until these ranges sort of form, it's difficult to know what you're playing, right? So here I could identify, cool, you have, you know, your general range 1, range 2, right? You could be creating a lower range around here. Or you could have had this as your range potentially, right? So if you zoomed in, you had a fake out here to come up. This also is a fake out. It's just a higher time frame candle. So there is some 5-minute structure that's going on here, right? There wasn't enough liquidity to go down, so it rejected, came up, started coming down. Here as well, you know, we needed that liquidity, so you potentially could have had an entry at around these top wick sorts of areas to come back down. So that's just what we're looking for in terms of price again, right? We were looking for price to create ranges because it's had a push and we're at a key zone now. If price creates range 1, range 2, we can start looking for our setups. And those setups, you know, obviously they don't have to tap 1910, 1913, or we don't have to get buys around these areas. These are just if it starts pushing straight down or straight up. These are key zones which price will likely, you know, reject at a little bit, or it'll make some sort of decision at. But depending on market structure, we can get sells and buys much earlier as well. Yesterday for our analysis, we were looking for sells, you know, relatively aggressively at around, I forgot what it was exactly, but it was only like 30-40 pips away. It wasn't very far, right? Whereas today our sells at around like 90 pips away, and our buys at around like 100 pips away. So it just depends on what market the market structure is and what price is printed currently. There's not enough data for us to really understand what's going on. We've had a really strong push down. Price needs to consolidate a little bit before we're understanding what's happening. But yeah, in terms of the analysis, I would say wait for some more market structure to happen. If price, let's say we drop down to the 15, right? Also, I took some sells earlier on the 5, relatively late into after New York, so I'll show those as well on this chart. But let's say we have a 15 top of the range around these areas. Let's just confirm that's not like a fake out or anything. Yeah, it's pretty strong level, right? Relatively strong level. So let's say this is what price is doing currently. Wow, incredible, right? We have a range 1 on the 15 and a range 2 on the 15, right? So what are we looking for in this case? If you're looking for trades on the 15-minute time frame, then potentially because this is generally bearish, right? I would be looking for a break of structure. So currently it's like this, right? It's breaking back up right now. It potentially might fake out, come back down, and then might do something like this, break out of this range, and then grab liquidity towards these areas again, potentially, to come back down, right? If this liquidity, if this previous 15-minute didn't close bullish, we could be potentially looking for something like this, right? You have your range, you coming down, and then you breaking, and then you grab liquidity, and then you coming down, and then we'd be in sells there. This is just a different way price could react, and we've seen this many times before. So it's just, you know, if it's a spike up and there's only one spike, you typically see it slightly higher. If there's two spikes, right, you typically see one that's slightly lower and one that's slightly higher, so it breaks those highs to come down. You do sometimes also see this one higher, this one lower, and then you just, these also run as well. So but yeah, just remember that, you know, this is the kind of structure we're looking for in terms of sells, and this is what we want in terms of higher time frame candles. It's printing on the 15, right, but it's not printing on the hourly yet because we haven't had enough time, so we're just waiting for that to happen. Obviously you can take your trades on the 15-minute candles, and I took a trade on the 5, so I'm going to show you where was that? I think I actually took it on the 1. Did I? Or did I take it on the 5? Let me check. Yeah, but this is a good time to start thinking about any questions you guys potentially had. Yeah, so for everybody who just joined or joined relatively soon after I started, we have changed the latency of the stream so that it's only about 4 or 5 seconds. So if you ask any questions, they'll likely come straight through, and I'll be able to answer your questions quite effectively. So yeah, okay, we did take this on the 5. Fantastic, right? So where was the trade? So cool. All right, on the 5, I identified that, you know, we broke into this range, we ranged here, and then we're potentially, you know, ranging in these sorts of areas as well. We came down, we broke this range as well, right? Let's say it was like this. And you have two kind of ranges around here. All right, so if you just look at price, you know, formed some support around here, faked out and starting to come down here. You know, general bearish structure, right? So you had some structure being formed here. You had resistance here and a support here, right? So once this was kind of formed in terms of my range 1 and range 2, I was like, okay, cool. You broke below, indicating that you want to continue down, right? Indicating we're coming down, but I'm looking for that liquidity grab. So where did I enter? I entered it around here. What was my entry exactly? It was 1900.58. So I think I got a slightly late entry. But yeah, I got it around there. It broke these previous highs, and I was like, cool, right? And then I took 10 pips. I closed like midway through this candle around here. But yeah, like it's just the same structure we're following, right? If you're looking at this, and I draw this out right next to here, you have a range 1, you have a range 2. What price does, pushes down, you've identified a general bearish structure, pushing down, break of the range, tap, and you're in. And this, we don't know where this is, right? So I would take the first position potentially even here, sometimes here, depending on how much volume there is. I identified here that there's not much volume because you're typically close to the end of end of session, end of day, right? And also for these previous candles as well, you know, you closed bullish respecting these sorts of areas, relatively bearish here. So I was looking for that entry to come down. Yeah, that was just a relatively late trade. I didn't call it or anything, but I just thought that this is a relatively good example in terms of how to trade the 5-minute using the same concepts, right? The concepts work for the hourly, the concepts work for the 4-hour daily, everything, and including the 5-minute, and so on. Cool. Yeah, so I would say that's probably the analysis for today. We need structure to be formed on the time frame that you're trading on. So for Asian, if you're trading on the 5, look for some 5-minute ranges, right? If you're trading on the 30, look for some 30-minute ranges, right? You could potentially, this could be a 30-minute range right now, right? So if you have this, you have this could be a 30-minute range, right? Cool. So what's happening? You have no bottom wick here, right? This could be a fake out to come down, right? If you have a fake out to come down and you start breaking below here, I'll look for top wick around these areas to come down, right? So that's the same trade that I just took, right? But you have to keep in mind that the higher time frame needs liquidity, right? The daily has no bottom wick, the 4 hour has no bottom wick. So at any given point, it could just start driving up. And if it does, we'll be looking for higher time frame sells, I'd say around the range between 1908, 1910, and 1930 in this, depending on what happens in terms of price. And that's looking to mirror these pushes, and if we're getting buys, these buys around here, these buys around there, buys around here, I'll say sells around these areas here. Because if you're looking here as well, let's go down to the 1, right? So in just this zone here, so many times you hadn't pushed down yet, right? You're still in this, you're in the range potentially. You come up tapping liquidity around these areas and you just start driving down, right? So that could happen. And just identifying those things. Okay, go look for some questions. 70 people, fantastic. Nice to see you all here. We had 21 peak viewers. Phobic, you're in a buy from 1901. 1901 what? 3-2, so you're like 2% drawdown right now. Okay. Well, what is your, what was your time frame? What were you basing it off? Like, are you basing off the hourly, 30-minute? Like, what was it based off of? Maui, can you explain how you guys read the wicks? When do you know it's a wick entry? So I just explained that, right? So we're looking for a wick entry when we see structure being formed, you're ranging, range 2, and then we see that, okay, cool, price is breaking the range. We'll be looking for wicks because we understand that it needs liquidity, so these are likely to be wicks, right? On the 5-minute or the 1-minute, this potentially could be a range, right? And it probably will be, but understanding on the higher time frame, you're closing below a certain support, indicating general bearish structure. So this would just be a wick here. So if you were to look at it, right, let's see like this. How do I draw this? But yeah, okay, if I just draw this as a thing, right? So this candle would be like this, potentially something like this, right? And then this candle, your next candle, right? You would open, break these highs, and then start flipping bearish, right? So your bearish flip would be like this, and your top wick would be like here, right? So if I get rid of this, or just move it here, this is what's happening, right? You have this bearish closure below this range, right? And then a top wick breaking the previous highs to come down. Okay, Phobic, you're in off the 30 minutes. Let's look on the 30-minute chart, right? Cool. So let's do an analysis based on the 30, just completely based on the 30, right? What would I do? I would look for this, drop some key support and resistance sort of areas. It's a little bit high, but it's right. We'll have something around here, maybe around here as well. So yeah, so you have 1902. 1902 is pretty strong, I'd say. Yeah, this is fine. And then your next support, I'd say, is actually around here, around 1898, right? So if you're in a buy at, what was it, 1901.32. Okay, I'm like 0.001 pip off, man. I'm so sorry. But let's say you're in a buy here. Generally, I would say market structure is bearish, right? You haven't broken these highs, and if anything, right, price, if it wants to drive up, you will see this structure, right? It's coming down, and if it wants to drive up, right, it will break these highs. So once it breaks these highs here, break it, and then you'll probably see some drawdown before you're coming up. I don't know how steep this drawdown will be. It could be here, could match this, could break this, right? So I don't know where this liquidity will be grabbed, right? But it will grab liquidity, right? How can we see this, right? These are not really any bottom wicks. You have no bottom wicks for these candles. You have no bottom wicks for this. You have no bottom wicks for this as well. So it's very likely that price is going to come down, break all these bottom wicks, potentially even down to these areas before driving up, if that's breaking structure, right? So if that is breaking structure, cool, you're good for a buy. But until it breaks 1901.7 on the 30, right? This is purely the 30 chart. I would be slightly careful. I'd be slightly worried in terms of like holding for too long, whatever. You also just like this as well, right? You close respecting. Close respecting. Obviously, there's no top wick at the moment, so at any point you could flip. If you flip, you could, tap. Let's look at the 5-minute range when it flips. But look at this, right? It respected here, and it's currently, if it breaks these lows here, you can expect it to come down. You can expect it to come down, fill probably down to at least here, 1900s, before making another decision, right? Because if you were to come back up, this generally is come up, right? Structure, so it's likely to tap this area before going up. So this might be the max drawdown you'll see, down to 1900 for like around, what is that? Like 6 pips, 6-7 pips. So yeah, but in general, I would be just look for where the 5s are closing, look for 15 closures, 30 closures, and just make sure that it's aligned in terms of structure. If it starts printing bearish structure, yes, we're looking for liquidity, but that's liquidity on the hour, that's liquidity on the 4-hour. Like you don't have a bottom wick for this hourly candle, right? And you're closing below this range, and you've just filled the range in terms of this wick. So if this flips, it will fill the range. Yeah, so just know that might happen. Let's go back up, let's scroll up. Would you say it is more likely to get bullish volume? Typically after a strong bearish push or a push in any direction, you usually get some level of retracement. And the retracement could either be it could either be a liquidity grab to continue in the same direction, or it could be market reversal, right? But until substructure forms, we just don't know. So right now, I would say, yeah, you could print bullish for liquidity, but you could also print bearish for liquidity to drive back up. So I don't know is the answer. Let's have a look. So this is the zucchini or the motion. The motion is essentially, yeah, what we just explained. I mean, like this is the motion as well, right? Like all of this is the motion. As long as, if you understand liquidity, if you understand like why, like where price moves in terms of market structure and adding liquidity to that. So basic market structure is this, right? Like tapping lower lows, lower highs, and equal whatever, right? So this I would say is general bearish structure. What we're suggesting is, when price does a push, if it ranges or whatever and it pushes again, it just shows that there's not enough liquidity to drive, because you're ranging in these areas, right? It's not pushing hard, so we're looking for liquidity before coming down if it wants to push. But if this happens, we'll take a sell here, not because we're expecting it to break these lows, but we're expecting it to at least come tap these levels, right? Actually, let me draw this all the way up here for you. So there's two scenarios, right? You either get this or you get this. Okay, so the levels, I would say generally here, here, and then you have, let's say just here for now, right? Like, yeah, so price can do, these are two typical scenarios that happen, right? So you come down, bearish structure, range, push down into a different range, and you grab liquidity to come back down, right? Or you could get this, where it's ranging, showing bearish structure, grabbing liquidity to come down, right? The chance of this coming down is higher because of this. The chance of this coming down is lower, right? Because it didn't break. And we don't know if it's breaking until we have this candle here, right? So the way we trade these two is different, The way we trade this is we get into a sell. We get into a sell regardless here. Right, we get into a sell at these areas. Why? Because for this one, we're expecting price to grab liquidity if it wants to go up. So we're holding till here. I would say that's your TP. For this, because it's closing bearish, right? We're holding potentially down to the next level, which is, let's say it's like down to here, right? So we'll probably have a TP around these areas. But obviously stops could break even at this point anyways, regardless, right? So once you tap this level, it's stop loss to break even. And then this is just a higher chance of a runner because you have the confirmation that it looks like it's continuing bearish structure. Obviously, again, there are some nuances to this. So if this closure is like no bottom wick for both candles, then it's like going to push up or whatever. And that's just your typical fake out, and it could be a reversal pattern or whatever. But those are, small things that you'll pick up over time. But yeah, this is quite, I think, a relatively good explanation for that. Does that make sense, Kurt? Right, let's... Any other questions from anyone? Can 1955 be a bit of a support? How small do you want that support to be? 1995? Holy fuck, that's so far away. Are you sure, Yusuf, are you sure 1995? That's like... Bro, are you looking at the monthly candle or like the yearly candles? 1995 is like... Yo, brother, 1995 is here. Yeah, sure, this is a support, but like you're not trading that. That's like 1,000 pips away. Yo, bougie. Yeah, I think yeah, glad that makes sense, Kurt. I'm happy to end it here if okay, 1895, brother. Cool, let's go to the 4 hour. I love the 4 hour because it just shows you a big enough picture of what's happening, but also relatively detailed like wicks into certain areas. 1885, 1885, 1895, I'm sorry, 1895. Can this be a bit of a support? What time frame are you looking at, mate? I mean, yeah, you can have some support there if you're looking at the 4 hour. Potentially, probably move it down to like 1883 sorts of areas like this. Like if you see this, right? See this, you see this, and you see like there's wicks here, right? So this rejection can be anywhere between 1880 to 97 all the way down to 1890, right? You have some rejections here. I would say you'd probably move it down a little bit, right? If you move it down, respecting this, respecting this, now suddenly this, right? This drive, just fill the range. There's another range between here on the 4 hour or potentially the 1 hour, just fill the range. That's it. See that it respected here. I would say your support is around 1893. Yusuf. 1895, sure. I mean, like if it makes sense for you, go for it, right? But yeah, cool. It's gonna be 1 minute till we close. 45-minute stream, I think, is pretty good. I don't want people kind of coming back to the streams and just reviewing this, and it's taking them like fucking ages to just go through the analysis and whatnot. So happy to end it here. We will be back tomorrow for more analysis. Thank you very much for tuning in. And yeah, bring your questions. You can message EvolutionDVS in the Instagram as well if you have any questions. But yeah, it's just another breakdown pre-Asian, and you guys can now go to Wix's stream to catch some trades. No worries, no worries. All right, see you guys tomorrow. Cheers for joining.